What's going on, you guys? Welcome back to another video. My name is Denis, and today we are going to be talking about my simple rule of investing. I may not be a multi-millionaire, but I am following an advice or advices from a multi-billionaire, and that is, you guessed it right, Daddy Warren. If you are from Malaysia and is looking to invest into Bitcoin with Luno, might as well just use the referral code down in the description box below. With a 250 ringgit worth of deposit, you and I, we both will be getting 25 ringgit worth of Bitcoin. It's free money, so just go get it. Not many people have said this, but why do you want to sell things that works? Yes, that is my question for you today. Obviously, when we are investing into a company, we are believing that the company would do well in the future. It is no surprise that we are investing to make ourselves more money, whether if it's in terms of capital gains or dividends. Have you ever encountered someone saying, "Oh my god, I sold too soon. I should have held on to the stock for a little longer to sell it at a higher price to get more profit"? I got one simple solution to that, and that is to buy and hold the long term. Now let's take Tesla as an example. Last year in 2020, a lot of people are buying into Tesla because there are a lot of media coverage, a lot of trend, and a lot of hype revolving around that company. A lot of people are hopping into the train because they want to take a quick profit. Now there is no problem with taking quick profits because a lot of investors do that as well, and that's what we call swing trading, I guess. But the problem here is this. The people who are taking a profit left the train and the train just went off. And Tesla just continued to hit all-time highs after all-time highs. And the people that have already taken their profit on the train station, as a metaphor, they will be thinking, should I maybe jump back onto the train? It's kind of stupid. If you have done your research before investing into Tesla, that means you know what this company does and you are really optimistic on what this company will become. And in that case, you wouldn't have sold your stocks when it appreciates in value in the first place. No matter the ups or downs, we as investors ride the waves just like a boat. So there you have the first simple strategy. Let's move on to the second strategy, and that is conviction. No, not jail conviction.
Stealing, right to jail. You're playing music too loud, right to jail, right away. You're driving too fast, jail. Slow, jail.
It's easy to research a certain stocks and start investing into that company. But it takes another level of courage and risk tolerance to have conviction towards that particular stock that you're investing into. And this, my friends, is one of the main reasons why Meet Kevin or Warren Buffett get to compound their net worth or their portfolio just by investing into certain stocks that they believe in. For example, Warren Buffett likes to invest into Coke, and for Meet Kevin, he likes to invest into Tesla. He kept on adding and adding and adding, pre-split, post-split, whatever the price is, he just kept on adding. That is why he gets to compound his portfolio's value at a really fast rate. Here, I'll give you an example. I am up over 280% on NIO. Please bear in mind that I'm not Warren Buffett, I'm not Wolf of Wall Street, I'm not here to flex my results. I'm just trying to share my first-hand experience for you guys. The moment when I entered into NIO stock, not a lot of people are talking about it at that time yet. I just came across this company and I did my research and I just bought a couple of shares in that company and I kept on adding as time goes by. I didn't have a lot of money at that time and I still don't have a lot of money. Please help me. But I kept on adding my positions into NIO every time I get a chance to. Because of my conviction towards that stock at that time, right now this particular stock has brought me a substantial amount of return and I'm quite happy with it actually. And back then there was very little media coverage on this particular stock. Not a lot yet. Not like Dogecoin where Elon Musk keeps on tweeting again and again. What it would do is that it keeps on making people want to buy more and therefore it drives the prices up. That time I was just doing all of my own research and I had to go with my own feelings. But I ended up taking the risk and trusted myself instead, and I'm pretty happy with how it came out. Not to advise anyone to do what I did there because I was a newbie investor, but I was just trying to take a little more risk. A young man who does not know what the heck he's doing, but he just did it right. I would say that luck was on my side and I'm really grateful for that as well. Last rule that I use for investing is really simple, and that is to invest into their companies that you are actually using. maybe like a product or their services. Do you use Facebook every day? Do you use Instagram every day? Or are you an Apple fanboy? Then just invest into those companies. The easiest way to find out their demands of the company is to see whether if you are using that stuff, whether if you need that stuff, and whether if you actually own that stuff. More demand means more revenue, and that in return has more cash flow, and that creates a stable company. And there you have it, guys. This marks the end of my simple rules of investing in the stock market. Bear in mind that this whole video is just for me to share my experience with you guys, and it's not a financial advice. I hope this video actually helped you more or less in your investing journey, and I wish everyone the best and happy investing. If you think that this video actually helped you out, then please do me a favor, subscribe if you're new around here, turn on the post notifications, and leave a comment in the comment section below if you have any questions, or DM me on Instagram because I reply them all the time. With all of that being said, guys, I will see you in the next video.